Hello, active traders, and welcome to Winning Entries. This is Ken Calhoun, your humble host, coming at you straight out of Colorado here for a new strategy session to get you up to speed on an exciting new course that I've got called Winning Entries. I know many of you had asked in surveys for help with managing your entries more effectively, and one of the things that I think can really help is not use a lot of squiggly lines or derivative software. I know somebody had mentioned on the site, they don't want expensive software to try and help you figure out how to enter. The trick is getting in on your entry in a place that's not too early, not too late, but in the sweet spot of a next wave or rush of buyers that's likely to put you in the money sooner rather than later, and then you can start feeding the trade or adding to a winning trade. So I'm really excited with tonight's event. We've got some current market charts to look at. As always, all information is for educational use only. I'm not making advice about what to buy, sell, or hold. And by watching this, you're not to make actual trades. We're trying to teach some of the strategies that work. You may have seen me featured every month this year and much of last year in Stocks and Commodities magazine. Technical analysis of stocks and commodities, multi-day sequential breakouts. You may have seen me speak as a premium featured speaker for the Money Show in New York, Dallas, Las Vegas, Anaheim, back when we were doing them back then, and the rest of it. So great to be here with our Winning Entries session for all of you here tonight. Really excited to see the turnout. I wanted to start off by thanking all of I think we ended up well over 130 comments from all of you. I'm the facilitator, but you folks are the stars, and I like to present what I do as a team facilitator to build a community of like-minded traders. So the most exciting thing is about my websites are what you folks post, right? That's why I like to see over 100 or 200 comments of people on the different sites that I have, because it tells me and tells you, each of you, what's on each other's minds. And it's kind of like doing a live in-person seminar where you can turn to the trader next to you and talk about it, or talk in a big group session or whatnot. So I like being able to see all the kind words in the comments, and I wanted to thank all of you for saying kind words and also for writing in good, smart insights. Like, we want to learn how to trade winning entries without expensive software. And we want to be able to figure out exactly when to enter the trade and new skills and make it very helpful. Feel free to ask questions tonight. That's what I'm here for. We want to make sure that we are focused exactly on what to do and what not to do. So anyway, let's get on with it. Thanks to all of you for being here. You may be plagued with the uncertain entries ailment, where right before you enter a trade, you're wondering what price do you get in at, and guessing doesn't work out very well. Neither does using a lot of squiggly line technical indicators that are somehow only seem to work out when a vendor's talking about it, but doesn't work out when you and I actually put on the trade. So instead, you want to get away from having a troubled, uncertain, where the heck am I supposed to get into the trade thinking. Tonight we're going to look at where exactly to enter your trades, what I call a safety buffer entry technique, updated for current markets, how to avoid false breakouts, candle entry signals and secrets and tips, how to get rid of uncertainty in your trades, and how to use second chance entries. Now, one strategy that I'm particularly keen on, that I'm focusing on tonight as well as a bonus, is what I call Bollinger Band and Average Directional Index ADX entry tactics. One of the things that you want to do is be able to filter out false breakouts. Now, you may have seen my stocks and commodities articles, my Money Show presentations, where I've always advocated, as a good rule of thumb, wait till at least 50 cents above a 15-day high before you get in. That's a good basic strategy. I want to give you a little more advanced sophistication in terms of a new strategy I developed that I've been testing out. Really excited about how well it works too, the last several months especially, combining Bollinger Band and ADX along with our swing trading and intraday charts. So we've got a lot of different things to cover tonight. Let's go ahead and move forward in our charts. One thing I want to ask is, if you do have any questions, feel free to ask. One thing that I'll be telling you about later is the next steps with our premium 2-webinar course coming up next Thursday or the Thursday after, or if you're watching this on video later, the downloadable course that'll be available later as well. As I mentioned, a new feature for tonight, we're going to look at Bollinger Band breakouts with an entry strategy combining ADX with the peaks, the previous peaks or previous highs in the Bollinger Band, and use that as a technical filter to help you make good trades. So with that, let's go ahead and get on with it. That's kind of like the only PowerPoints for tonight. Let's take a look at the charts and what to look at. Now, oftentimes you may be in a situation where you see a rockstar chart like today, WRK or LABD or Rackspace or GES, any of these other good breakout continuation charts, and you're wondering where to enter, say, tomorrow. A good rule of thumb is the more volatile the chart, whether it's day or swing trading, I'm probably going to spend more time on swing trades than intraday trades, but the more volatile and tight, precise action chart you have, the closer to the current price high you can feel safe about entering a new trade. So I'm fine buying NetApp anywhere over 35.5. I don't have to wait for 37 or 36 to get in because of how well defined and focused it is. So the sharper, the better you get to, say, a 45-degree angle breakout chart, and the tighter about which the chart price action moves, the tighter in, kind of clamp down like a vice grip, you can set your entry trigger. If, however, you have charts that are a little choppier, like say VRX, is it still worth trading? Absolutely. It went from 22 to 32. That's 10 freaking points on a $30 stock. Of course, it's a 50% gain in 3 short weeks. Of course, it's worth trading, but you have to set an entry trigger that's further up here than tight because of the up and down price action. It's got a wider channel. If you're to mark out, say, a trading channel or a box range or whatnot, you'd see kind of a bigger, loopier channel. So for that reason, as a general principle, and this is something you can use for the rest of your life as a trader, it's absolutely true. I've tested it in millions of dollars worth of real money trades, so I know it's true. This is likely to screw you if you get in a 32.8, pardon my French. That's likely to misbehave or behave badly. You get in there and then instantly it hits 33 and fades back down, you get stopped out. Then it runs to 35 without you, and you curse the trading gods and say, why me? Well, one of the things that I'm going to teach you in the premium course is how to avoid over trading and how to be more conservative in your entries, right? So for example, VRX, is it worth trading? That's the number one question you need to answer for yourself as a professional trader. If you want to make money, I know all of your goal is, everyone here tonight, your goal is to make as much money in your trades as quickly as possible. Am I right? As much money as soon as you can. Okay, my goal is to potentially, I can't promise, but to potentially help you get there as fast as you can with the very best chart patterns and strategies that make sense for you, which is why I have so many thousands of traders with this over the years. So anyway, here's a good chart, Best Buy. What do you notice about it? Is it worth trading? Absolutely. We don't buy inside here. We set our entry trigger somewhere above the high. Now, how do you do that? Always assume that you're going to get the professional traders will be selling to amateurs right at a false breakout, and it'll drop against you. So never ever buy right at a new high. That's another entry technique that is kind of an obvious one. You always want to set some kind of a safety false breakout buffer. When in doubt, at least 50 cents to stay out. So somewhere over 41 would make sense, but not 40.7 or 40.8. Follow up on this in the next week or two and say, oh yeah, it was right. I know I'm going to be right the vast majority of the time because I have been doing this for so many years. Another good entry strategy is to wait for after, and I like to give you a lot of quick bullet point, brief, actionable strategies that work out most of the time. Wait until after a minor gap before you enter any new trade. Or if you want to focus your energy as a swing trader or a day trader, only trade gap continuations and 52-week highs on swing trades. 52-week highs and minor gap continuations are the two single best strategic places to trade. So focus your energy on that, and I'll teach you how to do that in the upcoming premium events, but that's what to do at least, is only trade. And that's valuable. That's very actionable information. Only trade on days after minor gaps up. So what would be the trigger here? Well, somewhere over 38 makes sense, right? It did a gap up. We don't trade the gap up day. We wait till after the gap day and after it takes out a new high, and that puts on the trade. Just like in TAP, after the gap day, we had a gap up here, and odds are, if you're like me, oftentimes you'll miss some of the gaps on the day. You say, well, shucks, it ran up without me. Well, not so fast. Setting an entry, one of the core strategies is to look for a tall candle, a big, what I call a momentum candle, and that ties in nicely to what I want to teach you in the main course about candlestick entry signals and strategies. always be on the lookout for outlier data points. Okay, for those of you who also have a background in quantitative mechanics or engineering or mathematics like I do, we look for outliers. That's right. That's where you make the money as a trader. Is you don't screw around with the choppy nuisance charts that are just pesky like mosquitoes. You want to focus instead on outlier charts. Odds are you're going to miss the first big breakout. That's fine. You got a second chance on a move up. How do you set your entry? Again, a good basic rule of thumb, as I've always taught thousands of people, tens of thousands now, is 50 cents above the high of the gap day makes for a good continuation signal, as would have worked out fine here. But there's other strategies you want to start using as well. One thing I'm keen on teaching y'all tonight is, or at least getting the dialogue started with, is what I call Bollinger Band prior peak breakouts. And the way it works, you'll see, any of my competitors who are logged in here tonight will start copying it, just like they're copying my entries idea recently. And I'm the most widely ripped off guy in the trading industry, but that's okay because they can't prove they trade with real money P&Ls because they're fakes and morons. Anyway, one of the strategies that I'll be teaching in the premium course, which will now be widely copied by everyone else in the industry, but look for a previous peak. That's not enough though. That's like half the password or half the code. You don't just wait for a high above the previous peaks. That'll also often do a false breakout. There's one more confirmation tip that you need that's provided exclusively from an ADX signal down here. And I'll teach you how to combine those two. It's kind of a hand in glove or two halves of a password or a lock and a key that match together. The previous peak of a Bollinger Band can be used as a expression, kind of like a Bollinger Band squeeze, right? Here's a B-band squeeze. A trader had written in about that. That's where you get, here's a classic Bollinger Band squeeze, right? You can Google it. I'm not going to teach that because that's a basic strategy you can read up on anywhere on the internet. I want to teach you breakout continuations with specific entry patterns, combining Bollinger Band with ADX. It makes for very good, simple to use, easy peasy 1, 2, 3. Look for Bollinger Band peak, check a specific signal I'll teach you, and it's not ADX over 40, it's something different entirely. In the ADX, and then use that to determine your entry trigger over on the right side of the chart. And it doesn't have to be up at the new high. Sometimes it'll be a bit lower. And I'm going to teach you how to do that in the premium event. A Bollinger Band squeeze is this, where you get a B-band contraction, then an expansion, and the price action breaks above the high of the Bollinger Band. We'll also cover B-band squeezes. Why not? I'll fit that in for you guys too in the premium events in the advanced course section. Bollinger Band squeeze plays are really good strategy to capture initial volatility, but often we're looking at charts where, unless you've got a TARDIS or a DeLorean or a time machine to go back in space at a time, we can't go back here and trade this. Well, we can trade those over here. And so what I want to teach you is looking at precedent volatility patterns combined with a clear, easy to use signal. B-band peak, there's going to be a specific ADX signal I teach you how to trade to then teach you exactly what to look for in terms of your entry price level to use over here. Okay, so that's a B-band squeeze though. You go from a wide to a narrow contraction to the price moves. That's the 3-step on that play. And I'll teach you how to use B-band squeezes in context of professional stock swing trading in the upcoming winning entries training as well. You have my word, it's going to be very good in-depth specific strategies. Like what I teach you here tonight, it's better than what any of my competitors charge for free, just to set the bar higher. One of the things I want you to look for similarly is these B-band peaks, and then draw a horizontal line, and we're going to develop a strategy for how to trade. It's not going to be a breakout above that. Oftentimes the entry will be in here earlier, and I'll teach you how to look for that and exactly how to combine that with the ADX to confirm an entry on these good volatile charts like Best Buy, NTAP. See that? This is kind of an extension of a B-band squeeze because what you're doing is reacting to a secondary move after the big initial rush of a gap or big huge breakout that you didn't trade because you didn't see it till too late. That's okay. We now have you're about to be equipped with the exact step-by-step strategies you need to trade that kind of a entry configuration on the right side of the chart. And depending on what the ADX is telling you, that tells you exactly how to set your entry. And I'm going to teach you exactly how to do that in the premium event. It's very good. It's my best new strategy in the last almost year and a half. So it's been a really good, I've tested it out myself the last several months, and I was so excited with how it worked, I wanted to bring it to the trading community, so I thought I would make that a featured part. We'll especially go into detail on that in the second premium event coming up. When is that? September the 8th. So we've got a 2-webinar premium series coming up that you can enroll for. I'll give you information on that in a few minutes. The first of 2 sessions is coming up a week from tonight from 8 till 9. Plus, I stay around up to half an hour or 45 minutes, whatever it takes to answer questions from y'all. And then we have a second advanced, the core strategy session is coming up next week, and then the advanced session is the week after. But anyway, that's a good intelligent strategy, is look for a high peak in the B-band. The other tip, though, for that, you can't do that strategy with crappy charts. And just pick on Yahoo. Actually, Yahoo's not too bad. They pick another crappy chart. Okay, that's a crappy chart, eBay. You would not use this with a chart like this. I mean, okay, there's a previous high peak in the B-band, but that's a choppy as heck chart, and that's not likely to make you money. I'm not going to trade a chart with the 1-point trading range unless it's a day trade. For a swing trade, no thank you. I want to trade something instead like NetApp, which got 27 to 35. We got 8 points of range in there, right? That you want to use this with, and I'll teach you the specific step-by-step criteria you need to know to use that strategy, and what kind of charts is especially important. You want to fit hand in glove. You want to use the right technical entry price action breakout strategy for setting your entries with the right chart, and combine that with an ADX trigger point to help you set your entry. I usually use 2 different trigger points to go long. I'll scale in. So anyway, that's something I'll be covering for y'all as well. So let's say you've got a chart like this. And now I don't know how many of you read the outstanding book by Nicholas Darvis called How I Made $2 Million in the Stock Market. Well, basically it talks about trading in box trading ranges. So you got a box range there. If you extrapolate the price action, the next box range, say, would be there. So now we're in a third box range up to, say, here. Actually, a little lower. Let's put that right there. So we got these box trading ranges, kind of stepwise progressions. How do you set your entries? If you're day trading, you can buy new high peaks, right? Or pivots off of lows if you have a hammer, bullish engulfing, or other candlestick pivot confirmation. In absence of that, we expect this will keep going down, right? We're in a downtrend continuation. So we got support down here at 37.80, but the point is, this is not worth trading yet. How do you set your entry? You can wait for a new high way up there, or you can set an entry using a tighter entry trigger point, using not only a previous resistance area to consider going long in, but using other signals like volume confirmation and what the odds are based on the trading ranges. And as you look for charts that are well worth trading, one of the time-honored strategies is always to look for the strength of the underlying trend. You may have seen my acceleration ramp patterns where you get an uptrend that goes like this and then like that. That makes for a good breakout pattern up at new highs. If you have a channeling, an uptrend channeling instrument like SM, right? That's a good, sounds like something naughty, but anyway, SM, we got an uptrending, you gotta love this. You gotta have a sense of humor. We got a great uptrending channel chart, but because of the trading range is going to be this big, you're likely to get stopped out if you buy right here because you're still within that trading channel. So using the channels as part of a way to set or extrapolate your entry triggers is another good intelligent way that works out, because then to be a little more conservative and wait for a new high breakout above what the channel high would be before you get in. Or if you want to play it a little more speculatively, you can buy a pivot off the channel low. But using a step-by-step progressive strategy to set your entries intelligently, using just your eyes, trading the best of the breakout patterns really makes sense. Here's another chart, Symantec. Is it worth trading? Well, yeah, moderately. It's got a couple of points. This would be, say, for a newer trader, because odds are it's not going to hurt you too bad if it goes against you because it's only got 2 points of range. Something like NetApp, if you get it on the wrong side, it could be back down to 32 before you know it. You could have 3 points against you. Something like Symantec, it's got just a 2-point range or 2.5 points of range. So even if it goes against you, it may at worst maybe do a point before you know, based on the price action pattern, to get out of the trade. So is it worth trading? Yes, moderately because of the strength. But it's more a conservative play. Now, conservative entry trigger might be 24.5, but if you look at the underlying longer-term chart, you see the volatility is even better or even stronger here lately. So we have a shooting star here today, so obviously we don't want to trade. Inconceivable. We don't want to trade under 24. The trick is, how do you set an entry trigger somewhere north of 24 to get in? And now there's different configurations, and I want to teach you in the premium course exactly how to tell the difference between where to set aggressive versus conservative entries. And for example, bounce charts, especially if you got a bearish pattern here, use a more conservative entry. So I would not trade this at 24.50. I would be closer to the 25, like say 24.80 might be a trigger point for a long, because it's a bounce after a big downtrend. So for that reason, you push up the entry signal. That's another good takeaway from tonight's session, is understanding the difference between these patterns can make all the difference in the world potentially in your success or lack thereof as a trader. If you're getting stopped out too often, it's probably because you're not trading charts that have the right texture, the right context, the right volatility. Or maybe they're too volatile, or maybe they're too choppy, right? Picking the right kind of charts to use these strategies with is half the battle. And that's what I'll be teaching the upcoming premium event as well. Now here's a good example of a volatility breakout, a good strong acceleration ramp. It moved up here, we got a wide range candle, so long up here would be fine. There's the shooting star, so we know to sell a loss of shooting star support over there, and you make your trade, and bang, 1, 2, 3, you're in and out. Okay, now we drop down under the 50 moving average line, and it's starting to pivot back up. We see these kind of bullish lower shadows, the whiskers, tweezer, triple tweezer bottom, not quite a hammer because the upper shadow here is a little too, should be 10% or less, but we do have a hammer type pattern after a pivot, and sure enough, after that hammer, we start to see a move back up. And again, for more on candles, be sure to learn from Steve Nissen. He's expert in candles. What you want to learn is how to set entries using this type of configuration for your swing or intraday charts, right? So if you zoom in on the chart and you look for these good channeling uptrends, one of the things that I want to teach you in the training too, kind of shifting gears a little bit, is to evaluate the relative strength of the candlesticks based on the height of the whole real bodies and the trend directional pattern. 45-degree angle like this is great. We have a nice tall green candle here, that's also great. So buying new highs tighter on the entry makes sense in SM because of the fact that we've got a nice 45-degree angle. Now it's still a channeling chart, or it's a choppier channel, so you want to be cautious with that. But the fact that you've got a 45-degree angle breakout, you've got your large green candle here drying up some of the supply, tells us to put it on the watch list for a tighter entry rather than a looser entry because of the underlying strength. And I'll teach you the specific rules and patterns. That's kind of the what to look for, or the how to look for. I'd say that's the what to look for. The how to identify which ones meet the criteria and which ones don't is something I'll be covering in the upcoming 2 webinar premium series. Here's another good example in the Symantec chart. Look at that breakout. Now, how would you have known it was going to run? Well, anytime you got something that comes from under one of the 50, 100, or 200 moving average lines and crosses over, that's the first sign of a pivot, right? We had a kind of a dragonfly doji, almost a hammer down there, and we did see a large green momentum candle that dried up the supply with all that volume. That's a first entry signal above the high of that candle, right? So there. But anyway, that dried up supply, so that told you that buyers are coming back in. So, and even if you missed the day or day after that, you still have plenty of room to get in. And it went sideways for a bit, and now it resumed its uptrend with another gap continuation. Always look for a wide range candle at the right side of a congestion box or a bullish cup pattern, because especially if volume is increasing, like you may have seen my stocks and commodities article on a increased whole real body candle pattern with increasing volume, that tells you to use a relatively tight entry above resistance to manage your trade. So I'm going to give you a lot of things that you can use without needing special software or stupid proprietary indicators. If any of you bought some kind of these moron black box indicators and it never worked for you, though it seemed to magically work with the examples the vendor was picking, don't just say no to that madness. Instead, learn how to trade like a professional. You're looking at candlestick patterns, you're looking at Western technicals, you're looking at volatility and trading range and momentum, and using that price action alone to help you set your entries. And that's what I want to share with you. So that's another entry technique or guidance, is to look for, is even if you missed the first early breakout, and you missed the congestion. Well, I guess that's good. That would have been kind of boring to sit through. But now it's starting to wake up again. That's the next leg up. And so now it absolutely makes sense to trade up at new highs and on relatively tight entry, right? I would use a more aggressive entry in this instrument, just somewhere right over the 24. I wouldn't have to wait for 24.5 or 25 because of the underlying strength. So I'm going to teach you the patterns to look for professional swing and intraday trades. You know, for example, we look at some Rockstar intraday trade setups. I was teaching my traders this morning, we're looking for bullish cup patterns. And even if you're not trading the open, if you have a move into the close with the bullish cup, that makes for good entry. And so, you know, what I will often do is I'll set a buy stop order, say 20 cents above market, or above the resistance, I should say, above market at the time, to get in on a breakout if you're doing intraday trades. We're going to look at intraday initial open range breakout patterns and how to set entries with those. Kind of a tip that I've learned in doing so many thousands of trades the last almost 20 years now is you set the closing range and then set a trigger point above the closing range. And that's one way to set an entry for either a swing or a day trade. This is more for an intraday trade with this chart. So avoid, kind of dodge the bullet by don't trade. And these are all rider downers. These are all good, actionable, professional strategies you can actually start using in real trades. Well, anyway, you avoid this leg where it's inside this support resistance region and instead wait for 20 cents or more, depending on the chart. I'll teach you the difference between what to look for and where to set your entries. But look for that as a pattern to get in on an entry as well, above a closing range, right? Does that help so far? I wanted to give you all some good, useful information based on today's charts and actually how to trade them, right? Setting entries is really easy when you know what to look for. I mean, we have classic cup and handle breakouts, but to confirm an entry or to dodge a bullet, you also want to take multiple criteria like previous day's high into effect. And depending on the time of day, personally, I mean, were I looking at this chart for setup, I would have waited till 45.20 to get in, because I'd be skeptical here because that is the previous day's high. And this is in an early afternoon, horrible time to trade usually. So I set, therefore, my entry trigger a lot more conservatively and still would have worked out. So the good news is you don't have to get in at the very bottom or even during the trend. You can get in late and still come out like a champ if you're trading the right kind of charts with the right kind of patterns and the right kind of volume profile. So as you're looking for swing and intraday trade setups, those are the type of charts that you really want to focus your energy on, and then setting your entries specifically to work out is what I'll be teaching in the upcoming 2 webinar series. So, how to get rid of uncertainty in your trades. Well, the biggest thing to get rid of uncertainty is make sure you've got very tight, focused, wide-ranging, highly volatile, continuous charts, right? A chart, for example, that you would never want to trade unless you're a complete idiot would be something like CYCC. That would be a loser's chart. Hey, let's go long 3,000 shares. Oops, we got stopped out. Hey, it's going up. Let's buy. Oops, we got stopped. Let's go short. Oops, we got stopped out. Yeah, no, just say no. Just say no to moron charts. You don't want to trade things like CYCC. That's what those stupid, pesky kids trade. Now, what you want to trade instead, at least if you're a professional trader, are charts that are likely to continue no matter where you throw a dart at it. That's one of the best ways to stay, reduce uncertainty, staying on the right charts, is things that have a good history, like the character, the integrity, the honesty, the authenticity of a person, and I'm doing a background check on them and seeing what their actions are and what kind of person they are. You know, if you do a reference check, does it come up roses and they're nice, honest, hardworking, productive individual, or are they a parasitic, you know, worm or something? Well, as a chart, you want to avoid the charts that are sketchy and bad background. You want to look for the best continuous breakout charts that have a history of no matter where you would trade at it or get in long, it would pretty much work out just fine, right? It would be really hard to have gotten stopped out on this chart. And it was telling you it was a nice, well-mannered chart back here. It's telling you a really exciting chart, it's up here. It's been telling you it's a nice mannered chart all the way up here. What more do you need, right? That type of chart is kind of half the battle. The other half is avoiding false breakouts by understanding how to use safety buffers and where exactly to enter your trades intelligently.